Welcome to expert.guru. My name is Stuart, and I'm a VA home loan specialist. So, how does a veteran qualify for a VA home loan? First, the veteran must meet the minimum service requirements and have been discharged honorably. The service requirements are covered on expert.guru on our homepage. If you would, just put expert.guru in your browser and it'll take you straight to our website. The next step is to apply with a mortgage lender to see if you meet the lender requirements. The lender will be looking at your credit scores, your credit history, total income, your debt as well, your total debt, and other financial factors. Remember, the VA is not a mortgage lender and does not lend money to buy a home. Your application with a private mortgage lender is the starting point of your VA home loan. And most importantly, you want to work with a lender that understands the VA home loan process. As I said, the VA is not very involved in the actual mortgage lending process. In fact, the VA does not require a minimum credit score or a maximum debt to income ratio. However, the VA does have what is called a residual income requirement. And what this means is that you must have a minimum amount of income to qualify for the VA home loan. Mortgage lenders set the minimum credit score and debt ratio requirements based on the amount of risk that a particular lender is willing to take on. And a lot of lenders will not accept a credit score below 580. It's really best to go into the lending process with at least a 620 or better score. And honestly, with a higher score, the more likely your loan is going to be approved. And also with higher scores come better interest rates because the lender sees less risk in the loan. Most lenders look at all three credit scores from all three credit bureaus, and they throw out the top and bottom score and look at the borrower's middle score. Now, if there is a borrower and a co-borrower, the lender looks at the middle score of both the borrower and the co-borrower, and then the lender looks at the lower of the two scores, and that's the basis. The lower of the two scores is the basis of the loan approval and also the interest rate that will be on the loan. You also need to know that the VA loan program is the only loan program where the co-borrower must be the borrower's spouse or must be another eligible veteran. And remember, your credit history is just as important as your credit scores. Lenders want to see a history of on-time payments on several different lines of credit. Rental history is also important. Lenders want to see 12 months of documented rental history. This means do not pay your rent by cash or money order. There's really no way to document these types of payments, and lenders will not accept receipts from your landlord. Pay your rent some way through your bank. You want to write a check or have your bank cut a check on your behalf, like a teller check or a cashier's check, or you can also do an electronics funds transfer that can document through your bank to show that you pay your rent on time. That all being said, lenders will accept a written verification of rental history from your landlord if your landlord is a realtor or if your landlord is a property management company, like an apartment complex property management company. But it's always a good idea to pay your bills through your bank, so that if a dispute does arise, you have documentation to prove you made your payments and when the payments were made. Let's talk about debt-to-income ratios. Your debt-to-income ratio, or DTI, helps the lender establish how much house you can afford or how much of a monthly payment you can afford. To calculate your debt-to-income ratio, take your total debt obligations, monthly payments on debt excluding rent and or utilities, and divide this by your total income. Your income is before taxes or other withholdings. It's a good idea to reduce your debt level as low as possible before you apply for a home loan. Do not take on any new debt before or during the mortgage loan process, especially during the loan process. Do not apply for any new credit during this period of time, and do not run up the balances on any credit cards that you may already have. Now, a good rule of thumb is to keep your debt ratio below 15% going into the home buying process. The lower the debt ratio, the better. Lowering your DTI will maximize your budget for buying a home and increase the probability that your loan will be approved. All right, let's talk about assets. Assets are important to the mortgage loan approval process as well. And assets are things like money saved up in your checking or savings account, and these can help with the approval process. Money saved up in a retirement account can help as well. You want a statement showing that you have money in these accounts to show to the lender. Overall, mortgage lenders want to see that you are financially responsible and financially stable to be able to approve you for your VA home loan. Bottom line, this is what you need to know about the VA home loan program. First, a veteran must have acceptable credit scores. Next, established credit history is important as well. Documented rental history is important. And enough net income to qualify for a VA home loan is important as well. And of course, assets are also a big factor in the VA home loan process. The more assets we can show, the more financially stable it makes you look as an applicant. If you're ready to get started on your VA home loan, please visit me at expert.guru and click on the Apply Now button. Or you can send me an email at chris@vaexpert.guru if you have more questions. And look, if you found the information here helpful, please share vaexpert.guru with your friends and family, and especially other veterans. And remember, don't work with a newbie, work with the guru.